Welcome to my channel. Today I am taking option trading masterclass series number 3. Let's start. Before going to next topics, last series what we covered we can review once. Last series we covered option trading. In that two types, call options, put option. In that call we are able to see CE, PE, right? What is CE? Call European, put European. Okay, in that call option, call buy, put buy. Okay, call sell, put sell. We seen these things, right? When we have to take a call buy, put buy, call sell, put sell, means suppose if your market is going upside, if you are thinking market is going upside, we can think on the call buy side. If we are thinking market will go downside, we can think on put buy side. Okay, in same way we have to do call sell also, call sell side also. Call sell, if you are thinking market will go down, you can think a trade on call sell side. And if you are thinking market will go upside, you can think on trade on put sell side. You have two options. If your market is going upside, you can take a trade on call buy, either put sell. If you are thinking market will go down, you can take a trade on put buy, either call sell. Okay, these are the things we studied in the last series, and along with we studied in ITM, ATM, OTM. What is ITM? ITM is in the money, ATM is at the money, OTM is out of the money. And last series we studied these ITM, ATM, OTM. Okay, strike price. What all the strike price will be comes under the ITM, ATM, OTM. Okay, we have to take a trade on ITM only for safer side. ITM and ATM. If you are taking in the trade in the OTM, it is a risky only. At the expiry day, all OTM, means all the strike prices at the OTM, right? Those premium will become zero. Okay, that is the reason for safer side we can take a trade on ITM. Okay, and ATM. Okay, next we are discussing about candlesticks analysis or candlesticks behavior. Okay, most of the charts we are able to see these green color candle, red color candle. Okay, what it indicates, red color and green color, we can see it now here. Okay, this green color indicates we are calling as a bullish candle. This red color candle we are calling as a bearish candle. This green color indicates when if it is thinking market is going upside, market will go upside, means if it indicates that green color candle. If whenever your market is going downside, this red color candle indicates market is falling or market is going downside. Okay, and this candle, when you are able to see in the chart, it's look like this candle here. This is the candle's behavior. What are the things we are showing here? These are the candles behavior. I will explain one by one here. Okay, suppose think it some price will be there. Okay, it's open at, imagine it's open at 100 rupees. Okay, this now price is, okay, take assumption this is the 1 minute frame, 1 minute frame of candle, because this candle is, it will open and close, complete timing is 1 minute. It will open at, it is 100 rupees and it is closed at 120 rupees. You can think it in between that 1 minute, it's open at, means whenever it is prices in 100 rupees, it's started candle. In between that 1 minute period, it's go again little bit 95 and again it is come up to 125, again it's go down to 120 and this candle was closed. Okay, this is the candle behavior. It is okay, means its candle is open set, 100 rupees, close at 120, but this candle low price is 95 rupees, high price is 125 rupees. Now it understood. This open and close in between, we are calling this as a body of the candle, and this is the, it reaches the high price, right? This is the, we are calling as a wick. See, this is the wick. Some stick line it is, we are seeing, right? This is, we are calling it as a wick or shadow of the candle. And this is the high, it met high price and it came back, right? We are calling as a high, and this is the calling as a low. This is the body of the candle. This is the bullish candle, this is the bearish candle. Okay, remaining concept we'll see in next series. Thank you.